Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we are discussing common questions to ask a business broker when selling a business with Jennifer Smith, a business broker in Cape Girardeau, Missouri with Murphy Business Sales. Welcome, Jennifer.
If you're 3 to 5 years out on a business sale where you're thinking, I think I want to start positioning for retirement, get a valuation done now. Let's figure out where you're at and where the business is today and see if you're happy with that. If you're happy with it, then just keep on keeping on, and in 3 to 5 years, we'll sell it, right? But more often than not, the seller is thinking, gosh, I wonder what I could do to boost the value over the next 3 to 5 years to get a higher selling price when I'm ready to retire. And because our interests are aligned, we love those conversations, right? So sometimes we'll do a business valuation 3 or 4 times over a 3 or 4 year period for a client and watch them ratchet up that value, right? And we'll coach and help them. We actually have a program called Value Coaching where we help them along the way increase the value of the business and value it every year. And then when we hit that magic number that they're comfortable with and that their financial planner is comfortable with so that they don't outlive their money in retirement, then we pull the trigger and then we move forward selling the company. So we tell people, we're not going anywhere.
Right.
So start the conversation early and value early and often. It's not a difficult process and it's not expensive. There's really no barrier to securing that.
Well, and I think that that's an important note to understand because I think in general, business owners kind of have a concept, right? And they might say, well, if I could sell my business for $3 million, then I could, live out the rest of my years and fine and be perfectly happy. The problem is they kind of create that number in their head of what it would be ideal. And part of the process, even planning ahead for 3 to 5 years is really getting the real price, from somebody who is selling businesses, pre-pandemic, post-pandemic, during pandemic, and really knows what the market is pricing these particular types of companies. And so once you get that a little bit of a reality check, I think, then you can make some really good decisions because some people might take a little bit less now because they just don't want the headache going forward. But it puts the decision process back in the seller's court, but it gives them a realistic view of the price.
You're so right. And I'm so glad you said that because you and I, Melissa, both know it's not based on revenue, it's not based on debt, and it's not based on potential, right? So if you have in your mind, my business has so much potential, somebody's going to pay me $1 million for it. That's just not how it works, right? So, it's better to get real with the number. Don't bury your head in the sand. Let's get real with the number. Let's find out what a likely deal structure is and what the buyer pool looks like. And we will never, ever push you into selling if you're not ready. We'll just have a good conversation with you, let you know what your options are, and then make a decision together on how to best move forward.
That's awesome. Well, we've layered kind of down your website, your email address, and your phone number. What we encourage business owners to do is to reach out and just go through that first phase and try to get an idea of what it looks like so that you can make some decisions going forward or set a timeline if that's the case, especially if there are family members involved or employees and things like that.